Well chaps, how's it going? We are going to jump straight into this video and discuss today some option selling on futures, more specifically on oil. I'm going to give you a quick rundown of the account today, and then I'm going to show you the strategy and stuff that I'm going to be running on oil for a little while. So as you can see, we're up 6k in the year. Very nice. Market is closed right now. It's due to open in about an hour or so, or about 2 or 3 hours. And as you guys know, as usual, our weekly MES trade will be posted in the Discord. So everything's in the account is going great. We've got our current oil positions. We've got a CLQ4 position expiring in 45 days. We've still got $100 to collect on this position. So that's $2 a day right there. I'm thinking of closing this one out here very soon because it is not really worth holding it for the amount of capital that is required on it now. We've also got another oil position. Sorry, that's gold. Where's the other oil position? This one expires in 12 days, but look, in 12 days, it has $110 to collect still. So we are definitely going to be holding this open until expiration. That'll be a lovely, nice win right there. We've got gold. We've got our gold call side that I added last week. It is right now up $10 or 33%, just using our put side that we have open right now to just bring some cash through the door by selling shorter term calls against it way out of the money, 0.00 delta or 0.01 delta. We also have a nice copper trade here expiring in 23 days. As you can see, it has $93 left to claim on it, and we're already up 43. So no reason to close these. They're both 0.01 delta, so lovely right there, way out of the money. We've got our ES trades, our MES trades, they're all looking absolutely beautiful as well, so nothing to worry about here. All the MES 112s and ratio spreads looking great. So let's get straight into the oil discussion. If I go to /CL, I like to go a bit longer term. It doesn't really matter, you guys can do what you want, but 137 days out on oil right now. If you can go all the way out and you can sell the 54 puts. And as you can see, one of them is paying you $4,800 or $480. I wish it was paying $4,000. One contract pays you $480, and your buying power is $1,800. So what I would like to do is I'd like to sell 2 of these. And as you can see, if you sell 2 of them, you're collecting $960 in premium. So here's your 2 options for this trade. You could sell 2 of these, and then buy put debit spread just outside the expected move. Drop that to 1. So what's happening here now is we're collecting 650. It's taking up 4,200 buying power, but our max profit is 1,600. So the way this will work is if the price of oil stays above 66 by expiration, you're going to make 650. If it drops below 65 and is above 54, you're going to make 1,650. So we could move these a bit. I'd probably rather go in a bit deeper like this. To me, this looks a bit better. You've got more protection in this big empty zone in the middle. 2,400 max profit for 4k on the buying power. Now, let's have a look at what this would look like on the curve, just so I could show you guys. This keeps zooming out. It's incredibly annoying. I need to put on analysis. We're going to take off all of these. It's just this one on. And I'm going to zoom all the way out. Okay, so here's what it would look like if I go to at expiration. So as you can see, we would be green all the way, no matter what the oil price is to the upside. We're going to be green the whole way of $470 always. But you can see right here, if it pulls back into our debit spread, the profit goes up from 470 all the way to 2,470, and then below our strike, which is right here, it starts to get chipped away at, and our break even would be right here at 52.77, and then obviously you've got your massive loss potential below that. But obviously, as you guys know, we're not idiots, and we use stop losses, and we also use other hedging strategies, which we're not going to discuss in this video. That's for a whole nother video, but it will be coming soon. So that's one option. Now, what your other option actually is to do a ratio back spread. So if we go back into the table, and we get rid of this put debit spread, and instead we buy a put. Now what we can do is let's go down to about 60 strike. In fact, yeah, 60 strike maybe. So now what we have to do is, now that we've just buy one put, but now we have to sell 3 of these. But don't let that scare you, risk-wise, because this is actually a safer trade. It is the same. You still have 2 naked puts and 1 put debit spread. Your 1 put debit spread is just very wide, and then you've still got 2 of these that are naked. So this one that we bought makes one of these not naked. It covers one of them. So what we can see with this makes 620. So the last one was making 470. So let's actually up it a bit. There you go, 470. So now this is going to make the exact same amount. However, look, almost half the amount of buying power if we do a 1-to-3 ratio spread rather than the 1-1-2. And look at our max profit, 6,970, or we'll call it $7,000. Whereas the 1-1-2 was... The max profit on the 1-1-2 was, I think it was 2,500 or something, 2,400. So you may be thinking, why on earth would you ever do a 1-1-2? Well, your answer is this: we only start to see these big profits come in once we cross below 60.5. Whereas the 1-1-2, we were like here, so we didn't have to drop as much to see the profit. On this, we have to drop much more, and the closer we get to the 54 strike, the closer we'll get to this max profit. So now if we go back into the curve, we'll have a look. This is what it looks like. It now looks like a big tent. So as you can see, we make 470 no matter how high oil goes. If oil at expiration starts to drop and breaks past 60.5, well, look at the profit. Look, we've got 1,000 profit right here. Then here we've got 2,000. Here we've got 3,000, 4,000, 5,000, 6,000, all the way up to 7,000. If it expires exactly at our short strike, that will be $7,000 in profit. And you can see our break even is even lower than the 1-1-2 as well. Pardon me. So now let's look at the chart on oil, and we'll see what's going on. So notice that I picked the 54 strike. You can go much more aggressive if you want. So this is the chart on oil. This is the daily chart. You can see that we have a massive, huge supply zone here. Or sorry, demand zone. Massive demand zone. Weekly and monthly time frame. The whole way across here. Now, as you can see, every single time price has tapped into this, we've bounced. So if we come here, you can see bounce, bounce, bounce. Right here. Right here, here. Didn't quite touch it here. So are we going to come back down to it? Who knows? But right now what you can see is we are in a lovely area as well right now. We are printing some sort of wedge. As you can see, it's respecting it very well to the upside and to the downside. This does look sort of like a fallen wedge bull flag type thing here, we can see. So possibly we're going to get a bounce here. And if we do, these long-term positions could print on a nice little rally, and you could close early. If we fall below here, we've got this big gap. Now notice the prices though. So this big massive demand zone that has been holding us up now since 2021, so years this has been holding us up for. The bottom of this zone is the 61 strike. However, the strongest support area is going to be coming in about 69 to 67. Call it. That's going to be the strongest zone. Now, notice our strike was all the way down here, 54. So it means it would have to break all of this humongous support for it to get close to our strike. I think it is incredibly unlikely that's going to happen. I would give it less than a 1% chance that this will break down and come anywhere near our strike prices. You can see the RSI has cooled off nicely after this big rally and overbought territory up here, which tapped our zone and brought it back down. So in my opinion, oil is looking like a long for me. I'm happy to, whenever I get this position expiring next week, I'm very happy to start loading up on these. I would take one tomorrow or tonight if I could, but unfortunately my buying power is maxed out. So I've got to wait until the 2-week expiration one closes, or I could close the one that only has $100 left to claim, the 45-day expiration one, and I could put on a further one and try and collect some more premiums, bring some more premium in through the door. Let me know what you guys think. This is just a quick video to discuss what's going on here, I also want to make another video and discuss copper. I've been selling a lot on copper. As you know, copper's had a magnificent rally. And gold, I want to do a video on gold too, and get your guys' opinions and just show what I'm doing, show that what's working. So thank you guys, thanks for listening. Please leave comments, questions. I'm happy to engage. I'll reply to every comment, and make sure to join the Discord group where all my trades are posted. And on this futures account, we are up 6k on the year, and on the stock account, we're up about also around, I think it's 5k, just under 5k on the year as well. All trades are posted in the Discord. Alright guys, thank you.